Very many traders fall victim of this particular concept. Very many traders, especially the support and resistance traders. Those ones that feel like market moves in just two directions, the support and the resistance. Well, I don't mind if it makes you money, it's quite okay. Support and resistance works. But here is something, there is a refinement. Here is something that will change the perspective for you in your trading. So get in with us as we discuss accumulation, manipulation, and distribution, the AMD strategy. All right, so welcome back, guys. This is Sloan Trades, and in this video, you already know what we're discussing. Please like, subscribe, and share. All right, so let's get down into it straight. So this now is a setup. This is a pattern, and most traders now, most support and resistance traders, not just support and resistance traders, other persons that probably think that you can get entries from a demand zone and get entries from a supply zone. Actually, you can. SMC traders, we do trade supply and demand. But then there are things you need to look out for also while trading this support and resistance. So basically, this now is our accumulation market. Most traders in a ranging market, they tend to sell the high, buy the low, you get things like that. It's totally normal. Basically, you can catch trades or trends from here and here and here. But eventually, you forget something about the fifth rule. You don't understand that after the fourth step, the next thing the market is going to do is probably to sweep that area and then move. Okay, basically taking the whole liquidity or orders from here and then expanding a bit. That is like to sweep liquidities for SMC. That's what they might call it. Then an expansion to the upside. So this particular thing now is called the accumulation. Here is the accumulation. Then we have the manipulation. The manipulation is the sweep or the take off orders or the liquidity sweep. Then we have the distribution. Distribution is the expansion, the expanded zone. That is the distribution. So you might want to take a screenshot or you might want to write it down in order to understand this now. Follow it up, you understand very, very well. Alright, so these zones now are liquid zones, both the highs and the lows. These zones are liquid zones, and eventually when you take your entry from here, you get swept. And then the market expands. Now you now start saying, I had this particular trade right, or the market just swept me out before it moved. This was playing out, but you don't just know about it, right? So when this happens now, I think it might be very, very important to look on a higher time frame. Get the zone that the market is targeting from here. Not just watch the zones because these are liquidity zones. When you see a market range around a particular zone, that zone is liquid. Avoid that zone for a moment, especially when the range comes on your entry point, on your point of interest. You get to avoid that range for a bit. Watch for how the manipulation will be before the expansion. Alright, so basically you can get this very particular thing by watching the higher time from the previous price, checking out for key levels where the market is looking to sweep into before moving. Alright, so going straight into the charts because this is not a very difficult concept. It's basically understanding the characters of the market. Experience will teach you if you're a beginner. But then if you've been trading for a while, you already know you should learn this and not let experience teach you the hard way. Alright, so going straight to the chart, I will be using USDJPY for an example. In this particular trade, obviously on an uptrend, and this is what the market now showed. This is our accumulation. This zone of price was where the market ranged and ranged and ranged and ranged. A couple of persons took their entries from here. Some persons will take from here. Okay. And other persons will see this break of structure from here, maybe on a much more lower time frame. And then they would want to cap their entries from here. It's still not bad. You're getting your entries, but eventually, if you're looking to target this high, you might not get it. But if you're looking basically to be a scalp trader, target the minimal zones in between here, fine and good. Okay. But then if you're looking to target this high, you're not getting anything. So eventually you would see this move. you think, okay, yes, the market is just ranging to go, ranging to go, ranging to go, and then boom, there's a sweep. And this sweep now causes the takeout of liquids in these whole zones, including the previous one that probably you might feel is the protected level, and market is not looking to break below it. Now eventually market sweeps it, then continues. Now as you can see, once this order is taken out, once these places are taken out, the eventual move is impulsive. Reason being that orders has been taken. There is no more time for ranging. There is no time for expanding. All right, so this is the expansion, and eventually you might now see a retest into this zone now, into this accumulation zone, maybe retest slightly into it, and then a continuation for an expanded price action. Okay, so this is basically the accumulation. Then where is my text? Should just get another one. This is basically my accumulation. Then the manipulation. Then expansion. The AMD strategy. Very, very important one. All right, so understanding this will help you. Now, how did or why did the market sweep these things? Now, market swept it because in the higher time frame there was a key level that is being that is not being respected. There is a key level that, as you can see, has not been violated. This key level is a fair value gap on a daily time frame. There is a key level right here that the market has not validated. It's still void. It's still open. Going to the daily time frame now to find out. Now you see it here. You can see this fair value gap here. This impulsive candle that the zone is empty. Market did not come to mitigate the place. So this was what the market was targeting all the while in order to mitigate before the expansion. So eventually, if you had gotten into here and you didn't look at this place, you've missed out on a very, very important, a very, very large profits from this particular structure, from this particular zone. All right, so understanding this is not very difficult. Just go to your charts, mark out backtest, and you'll find out eventually what you need to do in order to get into trades like this, in order to avoid accumulations, in order to avoid sweeps. All right, so this now is a huge range that could take probably weeks to months, and then eventual sweep in the continuation. All right, so thank you very, very much for watching. See you in the next video. Now, don't forget to like, subscribe, and share the video to your friends. Peace.